G'day guys, Cobb here. Hope you're all having a fantastic day. Guys, one thing I want to say to you is this. If you haven't got on the podcast, jump across the Cobb Crypto Show. Doing very, very well. We're up there as one of the, if not the highest ranking crypto podcast in the world right now. And it's because people like yourself are sharing it with your friends, family, and people on your Slack groups, across your Discords, your Telegrams, and all the different communities that you're in. Chances are, if you like it, so do other people. So you feel free to share it. I'd love for you to do that. Now, I want to give you a little bit of a rundown because we are seeing some really good movements in the market at the moment, and there's been some fantastic trading opportunities as well on the daily timeframes with patterns repeating, like we see here. Bang, nice move, pulled back, same thing, very nice move. But what do we do when the market has sort of got its skates on? And we know in crypto, we don't always get the pullbacks that we're after as soon as we may like to see, and we can continue to move for a very, very long time. The case in point really is Verge, I guess. I mean, if you have a look at Verge here, obviously got very extended, a very strong move on Verge against Bitcoin a little while back, then had a little bit of a pullback, and then a very strong move once again. What I want to sort of show you is how I look to trade these strong moves through here, because it can just continue. So how do we do it? Well, let me just first of all jump across and find one that's kind of in the middle of a run rather than pulling back. Okay, so EOS right now has had a very strong move on the 4 hour. It's obviously very extended from its moving averages right now, but it's the beginning, so to speak, of the actual daily move. So from my viewpoint, where I am right now, we have seen it pull back into the cradle zone once. Excellent, nice move there. Pull back again, and another opportunity just here. From here, we've now had one day where we triggered. Today's been the big move. Now, a move like this can continue for multiple days, and it can do a huge amount, like what we've seen here on Verge multiple times. So if you didn't get in on, say, a daily cradle like these two opportunities that were present, that a lot of the members did take because it fits a lot of the rules, then there are still options for you. And if you are somebody who likes to intraday trade, let me take you through and show you a few things to watch out for. Of course, the 4 hour is still overextended. It may not pull back because the move may have just gotten started. So you move down the time frames. Again, a nice little cradle right there before that very good move, but nothing just yet. Move to the 1 hour. We're still extended from the averages. We could wait on the 1 hour. We can also move to the 15-minute. Now, I personally don't trade anything lower than the 15-minute. It's just something that I don't like to do. You know, and look, when I'm looking to trade these lower timeframes, I do prefer to trade the higher market cap tokens or coins because they do have better volumes, and therefore I can tend to get the fills that I wish to get. So if I've got a stop loss at A, it gets filled at A for the majority, like for the whole position, rather than it slipping down and having a worse position, or sorry, a worse fill. Because when you've got a tighter, when you're trading the lower time frames, you tend to have a much tighter stop loss. Of course, if you're trading a 15-minute cradle, such as this, as an example, not saying it was a good one, you're going to have a much tighter stop loss than, say, trading the daily candle. So what is my objective when trading the lower time frames? It's really around the stop loss. Okay, it's more around the stop loss than anything else. Now, I'm looking for a very strong stop loss. I'm not just looking for something flimsy. I'm looking for a strong reason. Now, whether that be a double Fibonacci booster level that shows a strong point at which the price may bounce from, or it's an old support and resistance level that I may have working in the past. These are the sorts of things that I am looking for on the lower time frames. Okay, so I look for significant supported stop loss areas. Now, in the case of EOS, let's just have a look. There's not a great deal in the way of anything really. There's a little not really. There's nothing really there on that daily time frame. It's really just for me to. I don't see anything on EOS right now, to put it bluntly for you. But the idea, like I say, is I am looking to go to the lower time frames. I've got to understand that with lower time frames, I need to be much sharper, much faster. Markets move quickly. I need to make sure that I've got a very strong stop loss or reason for the market to pivot from that point and continue to move up, and my stop loss to be protected. As always, if you are looking to enter in an intraday trade, guys, it's very wise to have different risk management rules for these positions. Because because the stop loss is much tighter, your positions tend to be much larger, which also means if the slippage does occur and you don't get your stop loss fill order exactly where you want it, then it does exponentially increase the amount that you will be stopped out by. I.e., if it moves down by that far on the 15 minute, so if it moves down by, I don't know, a few satoshis on the daily candle being slippage, it's not a big deal because the position's over a much larger entry and stop loss. If it was to occur on the 15 minute, where it's a much tighter stop loss, obviously each satoshi that it moves will be a more significant loss to you. So it's always wise to look to minimize your risk on intraday trades, especially when you're getting started. I hope it helps, guys. Bye for now.